Varun Saboo joins us, Head of Equities with Anand Rathi. Let's take a conversation forward. Varun, good to have you on ET now. What do you make of the market? Are we in for a prolonged period of consolidation, or the worst is gone and we should now prepare ourselves for a major uptick?
Yeah, hi, thanks, Ibina, and thanks for inviting us on the show. So I really don't think so that this consolidation will continue for long. The only reason why we went through a phase which was a little difficult for the markets in the last 1.5 months was because of the FI flows being quite negative. Obviously, it's very difficult to take a call on that. We don't take a call on liquidity, how that's going to shape up going forward. One thing we need to understand that in case the FII flows have to continue also from here. So currently they have sold above about around 1,30,000, 1,40,000 crores. In case they have to sell some more also, luckily our domestics have enough wherewithal to stand the same, right? So I don't see any material downsides in the market surely in case of FII flows have to be negative. But once their funnel stops, I think there could be a sharp reversal and markets could do extremely well. What's supporting the markets is the strong fundamentals that our companies are going through. We are seeing demand trajectory being strong across sectors. We recently hosted our conference in Mumbai. We had about 185 plus companies which had attended the conference. We had 8 marquee speakers over there. And it was, it was across that we were hearing that demand pattern remains very strong. Businesses are doing extremely well, be it any sector, be it hotels, be it textiles, retail, be it cement. I mean, we are hearing very good bites. The only 1 quarter blip, which was the last quarter, was more so because of because that being a quarter where you had excess rainfall, floods were there. It was also a quarter where we were just coming out of elections. So that was the jerk which the market saw in between. But I think that was just a blip, and we should see sharp reversals going forward.
But in general, numbers have disappointed. We've hardly seen any upgrades. What makes you confident that things could look up? Because for things to look up, economy has to pick up, credit offtake has to pick up, jobs have to pick up. Nothing has happened.
Absolutely. So it was just a 1 quarter blip, as I mentioned to you. If you remove this quarter, for the last 3 years, I think in a row, our EPS has only seen upgrades across. It has not seen downgrades. And also for this year, I think we should wait it out for the entire year, financial year to get over to see how the upgrades and downgrades would look like. If we have to take in cognizance that this is an election year. You had this last couple of quarters going through that, and if we see the government spends which happened, that was down about 35% in Q1. That recovered to about 15% negative till about 6 months. And now what we understand that things should start picking up on that front materially. And if this covers up, which we are quite confident of, that things should start reversing materially over there. I don't see any challenge going forward. And in terms of earnings, I see a major pickup coming in the third and fourth quarter.
And where do you see the reversal happening? I mean, will it be capex? Will it be consumers?
So we are very optimistic about all-round pickups. So capex definitely, as I mentioned to you, government capex will start picking up. If we talk about private capex, if we saw L&T's order booking, it was clearly showing that capex has picked up. They surprised majorly on the order booking which was there. If we hear ABB's last con call commentary, they clearly called it out in their commentary that they're seeing private capex picking up. So both government and private capex would start shooting up going forward. It's obvious that most company balance sheets in our country today are delevered. So and most companies are coming and raising money also. We have seen companies across coming and raising money. We have been seeing so many such issuances which have happened in the last 6 months. So companies are flush with cash. Things are going very strong on the ground. So there's no reason why you would not see capex picking up. So that is number one. Second, in terms of consumption, we are already hearing companies across coming and giving have called it out that rural has picked up. In the last result commentary, across companies spoke. In our conference, most of the companies were mentioning the same, that rural has picked up and is going very strong in terms of consumption. So Clearly, consumption is picking up in the interiors of India. There has been a little bit of urban slowdown, which was spoken about in the last quarter. As I mentioned to you, I am seeing it as a quarter's blip. In our conference, again, companies were speaking about things have picked up there as well again. So it was just a blip, is what we are calling it out. I think you're going to see an all-round pickup in terms of sectors.
Let's get in a sense from you as well as to what the outlook is on heavyweights like Reliance Industries, for instance. It has been through a phase of consolidation. Retail has been fairly decent, but the sustained recovery has failed to follow through. What's the outlook when it comes to Geo and the risk reward for RIL?
See, honestly, again, if we have to talk about stock performance, it's been more because of the FII flows, as I've been mentioning. You look at any company, forget Reliance alone. I mean, you look at the Autopack, Mahindra and Mahindra, or names like iShares, etc. They all have, despite doing quite well, despite numbers coming out to be very strong, they all have seen stock prices either consolidating or correcting. So it has got nothing to do in the last 1.5 months stock price reaction versus how the companies are doing. I think Geo is doing very well. I don't see any reason why that should be linked to the kind of stock price performance we've seen. So don't see any change there. We have seen telecom ARPUs only going up across telecom space. Things have been well. So I don't see any challenge. Retail is picking up materially in most companies that we had at our conference. The commentary on retail was very strong. That retail has started picking up materially. So I'm very hopeful Reliance would also start reversing. Just let the flows slow down a little in terms of the negative flows from the FII side, and you'll see a sharp reversal there.
Okay, that's the view coming in on some of those individual stocks. Meantime, just checking in as to what the Nifty 500 is throwing up, and what's bucking the general trend is, of course, those Adani group of stocks. So there's Adani Green, Adani Energy, Adani Enterprises, and ports that are under a bit of pressure. But that aside, names like a Fortis Healthcare are down in trade. Lupin is a bit soft in the trading session, ditto with an Ipca Labs. Kunal, your take on some of these pharma names?
So I think it could just be an off day for many of the pharma stocks because I was looking at the pharma index. In fact, in the last couple of days, and they've come back very close to their respective 20-day moving average as a breakout. Now there are very strong exceptions towards the pharma pack. You look at DV Slab. I think it's almost been like 8 or 9 consecutive weeks or months rather where the stock has given consistent price performance. Sun Pharma was one of the other stocks which had done reasonably well. That stock, however, has corrected, I think, 200 points in the last 2 months of the price correction. But Lupin, I think, is one of the strongest chart from the entire pharma pack. I think this correction should be bottomed for Lupin. Ipca Labs also looks very attractive. So my sense is that the pharma pack overall looks quite attractive. There could be few exceptions, few odd charts which may underperform the entire sector. But then I think when you're looking at this as a large cap play, I believe that one should stay invested.
Okay, meantime, speaking of the pharma space, let's hear it out from HDFC AMC's Chirag Setalvad. And he believes that pharma players are well positioned to benefit from industry-related tailwinds, saying that they remain overweight on the space, but will be looking at select stocks. Listen in.
Those who are India focused, there are those who are generic focused, there are those who are somewhere in between, there are those who are concentrated, research oriented, and so on and so forth. So you have to get very, very stock specific. But I think the good news is that the environment is somewhat fertile in the sense that domestic pharma is growing 7-8% without volume growth. So if volume growth comes back, then that's a little bit on top. Hospitals are growing reasonably well, occupancies are high, and US generic price declines are easing. So what used to be 7-8-10% is now coming to 2-3-4%. So overall, the environment is reasonably positive, and that creates the opportunity for more ideas. But you have to drill down to a company-specific level, and when we do that, we find a lot of well-run companies, and hence we are overweight on pharma, but it's stock-specific.
Nuresh, pharma has shown traction. DV is a success story. Laurus is turning out to be a success story. In general, pharma has had a good run. Where do you think this rally will extend itself in 2025? Which are the stocks which you think have potential to yet give a double-digit return from these levels?
So the names which have generally not performed in the last whole rally. So first one is Laurus, which has gone sideways for the last 3 years. In the last 2 sessions, it has broken out. Same way, you look at Biocon, the stock has gone nowhere for the longest period. It's at the same price where it was in 2018. has been making a higher base around 300. Then you look at Syngene, very interesting. The stock did not correct much in the fall and is now back to the prices of 900, 920. All-time highs are around 950. The previous highs in 2023 was around 850. So I think there could be a shift in terms of leadership. This could be names which have not performed before, could take leadership going forward. So as of now, these are the three names which come on my radar.
Varun, Pharma is still growing in single digits, 7-8%. So I wonder what is the excitement all about?
So there's a lot of excitement what we see around this entire Biosecure Act, which is going to be there. So when we talk about these names which have been doing well, be it Divi's, be it Syngene, be it all of these names, they have been doing very well around that. So the entire thesis is getting based around China plus one. I think this entire CDMO space could look very good going forward as well. Till the time that is in place, plus with Donald Trump coming, the conviction around the same goes even higher. So I think all of these names will do well, including Loris Labs and also. I don't see a reason why this rally shouldn't continue.
On Adani Group of stocks, are you looking at adding more? What is your view on Adani Group of stocks?
See, I think this entire correction which happened. I don't want to. Obviously, I'm no judge to this. I can't be really talking about what has happened around this entire thing. But it's just that I want to just let audience of ET Now know that in the past also we have seen the same thing when Hindenburg came out and spoke all those things around the company. They came out with a complete clean sheet, and they proved every single bit that they were clean. Again, it's from the US that we are seeing these kind of allegations coming, and which seem to be quite baseless. I don't know. I mean, as I said, I'm no judge to it. So I think this is a good time when one could look at these names. They're some great names. They have great assets. Adani Ports is one of the best companies, best assets in the country today. You have ACC, Ambuja's. They are eventually they're going to be the second largest or probably the largest cement company in the country. So I don't see any reason why one has to not buy these companies in this correction. There has been a lot of noise from US around these names. I don't see any merit to it. Basis how the history has proven it wrong.
66 points higher for the Nifty from the day's low. We are consolidating steadily. Naresh, at what point in time you would say Adani Group of stocks are now looking reasonable? It is time to start buying them again, because if history is anything to go by, in 2002, 2003, if you bought these stocks, you were handsomely rewarded.
So it's a tough say a section of stocks to analyze purely on technicals, because we've seen wild moves all through. So out here, if you look at, say, Adani Enterprises, that's the one which sees the wildest move. But relatively, the only name which comes in the radar to buy on dips on whenever such news happen is Adani Ports, because that has the maximum institutional ownership. So on declines, Adani Ports remains the best. And if you look at other names, the way they've corrected Adani Total Gas from 4,000 to 600, I think it is back to 2021 prices. So we've seen a massive correction in the other names. So there are two plays only, one where volatility is still digestible. One is Adani Ports, and next could be, say, Adani Enterprises.
Okay, let's get those BTST trades going from our charters then. And Kunal, what's on your radar?
So I'll go with Wipro as a buy. The stock looking attractive. IT index is one of the better performing indices. Wipro is one of the stocks which is inching towards a breakout, close to that 575, 580 plus mark. So would look out for targets in the range of 615. Stop loss at 570. And Piramal Enterprise has done exceptionally well. The stock today has done, given a strong breakout on the monthly and the quarterly chart. So this could be a very strong trending move for Piramal Enterprise. Buy with a target of 1300. Stop loss at 1140.
Okay, Naresh, let's get in your BTST trade.
So first would be a buy on Birlasoft. The stock has seen a correction, and now we are seeing a recovery after multiple bottoms on the low end. Expecting a move towards 610 on BTST, stop loss at 590. Second would be a buy on ABFRL, which is bouncing from the same 290, 300 support. Stop loss at 303, target price of 315.
Kunal, just been one of those hot and cold stocks, right? Lot of expectations, no delivery, ABFRL. Everyone thought Birla stocks would start coming up. I also thought that they were doing all the right things, but suddenly they've lost their way.
Yeah, they lost their way in between, but I still believe that these are very strong stocks, Nikunj. And I look at it over a span of the last 2 years, ABFRL was, I think, closer to 175, 180 in 2022 mid-23 start. From there, the stock moved up to almost 350 levels, and from 350, it's come back into the 300 level. So, which means we've looked at a 100% recovery or a rally for ABFRL, and then from 100% rally, the stock has corrected 20% broadly, more or less in line with the overall mid cap theme over the last 8-9 weeks of the market correction. But now I think at 300 levels, it looks fairly attractive back again. So which means that the stock has ended this corrective phase, completed a mean reversion, and I think at 300 levels, I would be looking out for targets at least in the range of 350 back again for ABFRL over the medium term, say over the next 3 months or so.
Varun, what is your big trade for 2025? I mean, every year we get 1 or 2 trades. For example, quick commerce has been a great trade this year. Defense was a great trade for 2024. Railways was a fantastic trade for 2023. What's the trade for 2025, Varun?
So aspirational theme is the biggest trade for me in the country today. If you see up trading happening across everywhere, we're going on hearing that people are up trading. I think the biggest play here is Eicher Motors. Keep an eye on it. I think not only for 2025, but from here for the next 3 to 5 years, that's going to be the biggest play in my view. One has to keep in mind that's the only pure play, aspirational play in the auto space, and it's just starting to perform. So we have seen numbers for the last monthly numbers coming strong. We are hearing very strong bites across dealership networks where we keep doing channel checks around. And one has to keep in mind that people shifted from 100 to 125cc, from 125 to 150cc, and the next is above 150, and where Eicher Motors is king. And Royal Enfield is the biggest brand. There can be competition coming in, but nothing beats the brand which is there. So very bullish on Eicher Motors and the aspirational theme overall.
Okay, that's the view coming in. Let's also understand what the outlook is when it comes to the entire IT basket. How have you, Varun, read into the quarterly earnings? What have been some of the red flags? I know you're talking about how it's a one-off. Does that apply to IT as well? And what is it that you're expecting by way of commentary and quarterly earnings from the IT sector?
See, IT going forward is going to be completely dependent upon how US is going to shape up. Luckily, with Donald Trump winning and we seeing that, I could only see IT spends going up going forward. So if you have to take a longer term view, another 12 to 24 months, there's clear-cut thought process where IT should do very well. Now, the only thing which can be a dampener in between is that yields have strengthened. So the entire thesis which was getting built around interest rate cuts to happen, that could change. So when it comes to valuations, the DCF-based valuations could provide some stopping to the upsides which could have been there in the space. So I would probably believe that IT could consolidate from here. I don't see any material upsides in the next 6 to 12 months. But yeah, fundamentally, I don't see any change. Things should remain strong over 2 to 3 years there.
All right, there you have it. That's the take coming in on the IT basket. Naresh, let's get in some views on how you're looking at the tech leadership that we're seeing in trade today.
So we've seen almost a new 52-week high on the Nifty IT index. We've started seeing names which are consolidating for a long time breakouts, and that Wipro comes top of the place. Tech Mahindra is another which has started coming back. And many of these names are still lower than what they were in 2021. So focusing on names which have not really performed after 2021 and lower. Same way of Birlasort, which is down 25% from the top, looks interesting. So the whole basket, the leadership has been HCL Tech in the large cap space. Infosys and TCS have also started making a move, but I would go with names like Tech Mahindra, Wipro, Birlasoft, or even a LTIMindtree.
Okay, there you have it. That's a take coming in on the entire IT basket. Meantime, just looking at the overall movers in trade today, and on the upside, there's Piramal Enterprises as well, which has scaled up a solid 8.2%. New India Assurance, another winner. It's a 5% gain on that stock. Biocon, one of Kunal's recommendations, is doing quite well today. There's Colgate Palmolive India, which on the back of pretty strong volumes as well as a mover in trade. Berger Paints, Britannia, Jubilant Food, and Asian Paints as well are some of the other gainers within this sector. Other than that, there is a PNB, ABB India, United Spirits as well that are holding out quite comfortably in trade. Varun, would there be any sectors that you would be a bit cautious on that you believe have already seen quite a heady run up, and hence would you be a little bit cautious on the space?
I don't think so. Anything has run up recently. So there has been good correction for the last 1.5 months across sectors. But yeah, I would not be excited on the consumption sector overall. I'm talking about staples particularly. We have seen for the last 4 5 years that people have tried to time rural pickup, and then every time there has been a hope that things would start picking up. But one has to understand these are saturated categories, and that's the challenge here. So I don't see anything changing going forward. They are extremely well penetrated across the country. So growth will never be too sharp. So I think these will come off in their valuations. Obviously, valuations have come off from 60, 65 times that they were trading at to now about 40, 45 times. I don't see a reason why it can expand from here. I think it can contract further down to 30, 35 times. And that's where I see the challenge. So consumption, probably if it will not correct, will consolidate. Otherwise, I'm pretty bullish across sectors. The two themes which I really like, I've mentioned about aspirational theme, and the other one is the capex story, where I see a sharp pickup in capex with continuity in government and the outlook around it also.
All right, Varun, I'm going to let you go on that note. Thanks, Kunal and Naresh as well for joining in.
If you like this video, then like, share and subscribe to ET Now.